Good morning, good afternoon, good evening, FF family. My name is Dylan. As always, we're here with the FF podcast, and I'm here with Bradley and Nick. I'm so glad to have you boys back. Freedom Finances. This is what we're all about today. I'm excited to be back. We took a little bit of break, and we are good to go about some economy stuff. We're seeing where 2026 is landing so far, how we're feeling. I know we've heard a lot of things in the news. Looks like some data is coming back in, but want to see what's going on, see to make sure all you can be prepared for whatever you need to do to be successful for the year. I'm going to get started off with a question. I think something that I've been on my mind recently, and you two can help me, is I want to do a new investment. I want something to do for 2026. I want to expand my portfolio. I'm going to tell you what I actually personally have, and I want you to tell me what you think I should be investing in. So it's going to be about Dylan as always. So we want to make sure we got to kind of continue that trend in 2026. I'm going to start off with Nick. Well, I guess I'll start with both of you, tell you what I have, and then Nick, you can give me your first option here. So currently right now, I have a little bit in Bitcoin, about 100 actual dollars in Bitcoin, and that's going to be going up to, I think it's like 160 right now with what I have. And then as well with stocks, I have a general mostly dividend rich stock. I always forget what they're called. What are those dividend
Dividend
ones that
aristocrats.
those I've got pretty much all of those going on right now. I do have my 401k that's rolled over or is made into a rollover IRA. So with that, think about those options so far. What would you advise me to start on my next paycheck? How much and what am I going into?
Okay, well, so before I answer that question, so so you've got $100 in Bitcoin, and then everything else is just dividend stocks.
Yes, I play it safe.
And what are you? Is this a retirement? Is this what's your timeline? What are we looking at?
No, that's good. So first, yes, I do have my rollover IRA. Few grand in there for sure. Looking into that, I don't really want to touch that, but if you have some ideas, I'm open to it. But it's mostly like stocks going into like investing back into the stock market, kind of those S&P ones, right? So I have those. And the other those, I do have actual stocks like normal ones. So I have like my T-Mobiles, I have some cigarette ones and all that. So kind of think those average ones. I'm not going into like penny stocks. I'm not doing any like weed stocks, none of that. No game stock yet. But that 2 year mark is close. We should invest. So I'm kidding. Don't do that. But what are we thinking?
So all individual stocks, no ETFs, nothing like that.
I don't. No.
Okay. Well, I would probably go there. You seem like you're looking for, I mean, are you doing dividend stocks because you want that income, or are you just wanting to kind of grow over time and have more shares? Is that kind of the goal?
I think it's just more so just to get the income, make the money work for me kind of deal over time. And then like the more I get from it reinvesting back into itself, like its own stock, that will keep growing. So that's like what I kind of want to do. So when I'm 60 plus, I'll just go and cash it all out.
So there's a fund called Noble, Nobl, and it is basically a ETF of all dividend aristocrats. And so instead of buying each individual stock, you can just buy that ETF. It will invest, I believe it's evenly across all of them. It might be weighted a little bit differently based off of market cap. I'm not 100% sure, but I know it has all dividend aristocrats only. It does pay out like a 2.5% dividend. I believe it's quarterly, so nothing crazy. But it's a lot more diversified than trying to pick those stocks individually. And so you can just have a little bit of all of them. So I'd say if you wanted to try something a little bit different, I'd probably go into that. And maybe something that has maybe like a monthly paying dividend or something like that. I think O is probably one of the most famous monthly paying dividend stocks. They do, I think, like commercial real estate type stuff.
They do. I have one of them. I have them already.
Oh, okay. You have O already. Okay.
Yeah.
Then yeah, I would probably just look at some ETFs. Obviously, VU's always good, and I'd probably say Noble would be another good one to look into and just kind of start stocking away. That's definitely one that you don't touch for 10, 20 years, and then you're going to be sitting really pretty. You're definitely not going to have like explosive, returns from them right away. But I think that'd be good just based off of what you're already currently investing in.
So I currently, another added to this was how much should I put into it? So I spend about $200 a month to invest back into those to keep growing. Out of a percentage, what would you think I should invest into Noble? Like, I'm okay with adding a little extra this month to get it started, but where after $200 should I how much do you think I should put into that each month?
Well, I'd say to get started, I'd probably say like one share is fine. I think it trades at about $105 to $107 a share currently.
Oh, okay.
So even just buying a share, I'd say if I was to give you like, let's say you put $200 a month into that, I'd say 50 to $100 maybe into Noble. It's a very like stable. It's only been around I think since like 2014 maybe. So it's not
Okay.
like a super tenured ETF, but I think VU is always going to be one of my favorite ones. If you are more tech heavy, maybe QQQ. But I'd say probably between those three, I'd allocate either 40 to 50% to Noble, maybe another 40-ish% to VU, and then maybe 10 to 20% to QQQ, just to get some of that return on the technology side of things.
Okay. That sounds good to me. Bradley, what advice do you have for me? Same question. Anything different?
Well, so we're assuming you're going to keep all your stocks as
No
they are.
sell.
And then
Yep.
these are new things. I would say take that $200 for probably 5 years, put it all into VU. Put
Oh,
$200 a month into VU after 5 years. Like you keep adding, it'll keep growing because it follows what the S&P 500.
yeah, that's part of the S&P. I think that's in my rollover IRA right now
Yeah,
is what I have it in. That's the only one.
$200 a month. After 3 months, you've bought a whole share, and it just keeps growing and growing, and you don't have to think about it. You just put it all in there, and there will be some downs, like
Sure.
some Aprils of 2025, and then there will be some really good months, and you just put $200 towards that. You could do that for the rest of your life, honestly. Let it be and never think about it again. It'll grow 10% a year, and you can turn $200 into a lot of money in 30 years.
Yeah, so right now, with my rollover I have, I was just checking on it. I've gained since starting it like a year ago, like $2,000. And that's just it sitting there. So,
Let me here. I'm going to do a quick calculation here. If you start off with, I'm just going to say $0, and you deposit $200, and every year you do what? That's $1,200. No, that's $2,400. From here to, how old are you, Dylan?
I'm 32.
32. So let's say I'll just do, you can turn $2,400 a year into, which is over 30 years, about $70,000. You can turn that into $415,000 through compound interest, assuming it grows around 10% a year. So you would put in about 70K, you would take out when you're retired about 414,000. That's assuming you do $200 a month every month for the next 30 or so years. If you increase it a little bit, maybe it'll go up. So,
Nice. Okay.
yeah.
So, all right. Well, I got some options and
And
I'll
you
update
never
this
have to
next
think
F.
about it again.
Yeah, I mean, I kind of I don't really do that anyway because I'm not selling anything. So
Right.
if that's like something to put into, I mean, it's already in a plan I have. So,
Yeah.
I'll look into Noble and probably that. And we'll see about just funneling into either one, just seeing how it goes.
Cool.
Cool. Appreciate you, gentlemen. Anything you want to add before we get started for the day?
Nope.
All
Nope.
right, no problem. So everybody, today is January 14, 2026. One of the first episodes of the year. I really appreciate everyone for being here listening to us so far. So topics for today, like I said, we're going to talk about 2026 to start kick off with the economy. We're going to talk about prices, inflation, some automated trading. We're also going to look at some tech stocks where they've landed started this year. We're going to look at AI. I don't think that's going anywhere
Huh.
anytime soon. And we're looking at New Year's financial adjustments. So I'm going to start us off with Bradley. I wanted to talk about, so with like prices and inflation going on, I think that's going to be everyone's focus right now is, hey, where are we at from 25? Where are we at now? Let's see it.
So I got really curious a couple weeks ago, because gas at Sam's Club was 173, and I was like, whoa, that's really
Yeah.
cheap. um, and I'm in Colorado Springs, which is a decent gas market, but Colorado's more expensive. And I think eggs, I paid like $3.98 for 2 dozen. Great price. So I'm like, but but I still went. We went to Walmart, and we spent like $150 on like a relatively small grocery order. So I'm like my mind is telling me things are cheap, but that $150 isn't cheap. So I did some research, and I broke things down into 3 categories. One, products that are stabilizing. These are products where the cost is still relatively high, but it's come way down since the huge peak of inflation from 2021 to 2023. I put products that have high prices still and products that are cheap. And these are all compared to the 10-year average. It's my latest article on Freedom Finances. So here are some products that are relatively high but are coming down from their 10-year peak. Coal, chocolate, corn, gasoline, lumber, milk, oil, orange juice, steel, sugar, wheat. Those are all things that are stabilizing. They're all above their 10-year low, but they're coming down. All right. Now, those are all based on the manufacturer price that they sell to the distributor, not the price we sell necessarily. Here are things that are cheap right now. They're about the 10-year average or lower than. Cheese, cotton, eggs, rice. These are the products that have high prices. Beef, copper, gold, poultry, rubber, silver. So a lot of precious metals in there and a lot of metals, and then the S&P I put in there. So what I learned was like prices are coming down. Like you saw like a spike like this and then a steep spike down, but kind of like what we talked about with our last podcast was like once prices go up, they don't always come down, like they stay there. I think the right answer is once prices come up, they stabilize, they don't stay at their peak, but they don't usually stay below where they were before they hit a huge peak. So it goes up, then it goes down, but it's still higher than it was before. So that's what I've learned. Inflation for 2025 ended up being 2.7%, which is above what the Fed Reserves wants. But there's some things that are going to make your grocery bill go up, some that are going to make it go down. Overall, it's going to be higher than it was a few years ago because prices skyrocketed, but they're coming down, they're settling. Something like gasoline hopefully should be cheaper in the few months. But yeah, that's what I found out. What do you guys think?
It's interesting. All I could think of is going back to when like the price of eggs was going crazy, and now that now eggs are kind of back to normal and stuff. Because that was around the time that we saw that April drop when everything was going off a cliff, right?
Yeah.
So no, it is interesting to put it in perspective. It's not just even across the board. Inflation, everything's more expensive. It's just It really depends on which industry you're looking at. So yeah, I like that.
I mean, is it a time to I know prices are dropping. Is it a time to buy in the stock market right now?
I mean, the stock market's high. That's under prices that are high. It's at a record high, but it's always at a record high, right? Unless it's having a bad time. So is it a time to buy into the stock market? Yeah. I mean, you can wait for a potential crash, but it's high right now. The stock
market will never have the crash of 2025 ever again.
Yeah.
Oh, go ahead.
I was just going to say, those are good times to buy, but you can't wait or assume it's going to happen again.
Yeah. I mean, so like Nick, for example, like what are some recommendations you would have if you're going to be trading right now? Like, do you have if someone was looking into it now, is it the same thing? Do you have any ideas how you would be trading if you were, I don't know, starting out or just trying to invest more?
I think the same advice that we've given throughout this entire podcast is really true today. I think if it's not timing the market, it's time in the market. If you're investing today, invest what you can afford to keep in there for 30 years and diversify. I'm a huge fan of VU, but any sort of, even retirement like target funds and things like that, like anything that just keeps you widely diversified, invested in the stock market, trying to time it or pick the stock that's going to go up, things like that. I think it's probably more difficult today than it's ever been, I feel like. So I wouldn't play the trading game. I would just play the like, hey, let me just get in there, get something super stable and boring, and let it grow, for a couple decades.
Yeah.
That's how I'd play it.
I mean, that makes sense.
That's really
I mean,
all
when
you
you're
can do at this point.
Yeah, I
Yeah.
mean, because it just is like it just hasn't really changed, right?
Yeah.
Like there's not like this, there's no get rich game stonk here that you need to get in before tomorrow, like it's not, it hasn't changed.
Yeah.
Now, I guess something that's been trending though is we do have like the what's the word? The tech stocks. It's like tech, AI, they're all the rage of like mid 25 into 25, beginning of 26. I know I read an article that like the Microsoft CEO is talking about AI being something he's heavily pushing. It's no longer talking about being like AI slop. It's about being, it's AI growth is what he's talking about now. We're like at that point of no return, and we're only going up from here. So I guess in either one of you, what the tech stocks and like
Yeah.
AI, we talk about bubbles. We talk about are they just gonna keep growing? Like where are we at? I personally want to know.
Nick, I'll let you go. I'm gonna step away, but you talk. I'll be right back.
Okay.
He's gonna bring a prop.
He's gonna bring
Carrot Top.
bubble. No. um, no. Honestly, man, I mean, bubbles are so hard to predict. I think that's why they call them a bubble, is because you don't know that it's happening.
Right.
It's so hard because you think like hindsight. You know what I mean? Like, look at what Bitcoin did. And the first time that it really jumped up in price where nobody was expecting it, and then it crashed down. I think it went up to like 70 grand, somewhere around there, and then it dropped down to like 15, I think, at its lowest. And like in that moment in time, it was like the bubble popped, like it's gone, it's not. And now look at it today, And so I think tech stocks are so hard to predict because a lot of them are driven by AI, and a lot of them are driven by future potential growth and not current dollars they're bringing in. And so all of these overvaluated tech stock, like they may be appropriately valuated for what income they're going to bring in the future, but like we don't have that key that says like how do we go from what we're doing today to monetizing it and actually bringing in those dollars. And I think that's what would cause a bubble. And I think you're even starting to see some of the tech stocks drop a little bit because they are having a hard time going from, hey, I have this cool technology, to I have this cool technology that brings in more money than when I didn't have it. And so I think that's what could cause it. So it's not, are we in a bubble? It's how do we get from where we are today to bringing in more money, or else our high evaluations are going to be slashed in half like overnight if we can't make that transition. So if the question is like, do I think that we'll be able to make that transition? I think some companies will. I think some people are going to figure out how to monetize, and that's why I wouldn't try to pick which ones. I'm gonna invest in QQQ, right? A heavily tech ETF. And just bet on the industry itself, but there's going to be a lot of losers, I think, and it's going to be very hard to predict. Hopefully, you got your Nvidias and Teslas and things like that will probably come out on top, but there's no guarantee. So,
right. Bradley, what'd you bring us?
Nothing. But
okay, I sincerely thought you were going to bring a prop for
it. I will say, and I think I got the gist of what you're saying, Nick, was like, there are going to be some winners with AI. There are going to be some tech losers. That's a good point. My two questions are, we have NVIDIA who's selling these cards. Do we think that they're actually going to, like, the analogy is like they're the ones who are selling the shovels, right? And everyone else is digging for gold. How long will that last? And my second thing is like, what's the best company out there that's utilizing AI? Because there's Tesla, but it's not just like NVIDIA AI, or like they're doing their own thing, And so I saw that Tesla was going to cancel full self-drive subscriptions, or that you could purchase it, but you can only do the month-to-month subscription. So Nick, for you, get your full self-drive thing in if you want, or just do the subscription. But anyways, those were my thoughts on that.
Man, side note, I hate subscriptions.
I'm still trying to figure out, I got to go spend $8,000 or else I'm going to have to spend $100 a month forever.
Yeah.
Oh, wow. Okay. Dang. Yeah, no, I think Tesla's a good example, because I don't think it's like hey, how do I use this AI to go make money? It's like, how do I use this AI to make my product superior? You know
Right.
what I mean? Make my
Right.
self-driving better, which is going to bring in more money. Like the path to monetization makes complete sense in a company like Tesla. For NVIDIA, I think there's obviously the AI push that's going to elevate them, but like we're always going to need products from Nvidia. So like I don't think that's a bubble. I think maybe there's a lower valuation that happens at some point or something like that, but I don't think we see a crash. I think companies that are more solely just reliant on the AI are more likely to have a bubble, or if they figure out their stuff, they might, be one of those winners. So
So, okay, here's my thoughts with, well, first of all, I agree with Tesla because they're the only company that I can at least think of that's using AI past the initial stages of, quote, investing in AI, right? They're actually using it actively. Customers are getting it. But with NVIDIA, like they spiked in what, 2023? Like since
yeah.
2023, they spiked up. So my question is like, how long is that going to last? Are they just going to stay there or is it going to keep spiking up? I don't know. I just don't know. Like you said, we're always going to need stuff from Nvidia. Sure, before we needed stuff from Nvidia, they were pretty cheap stock. Then we needed stuff from Nvidia. It spiked up for AI, but I don't know. They're up 418,000%. 418,000. So
Yeah, that sounds about right.
yeah, I don't know. That's my thought. That was my thoughts with Nvidia. I just don't know.
Yeah, same. Makes sense.
So I mean, if we're going to, I mean, if we don't know, is I guess the real question be is like, is now a good time to just invest? And then to me, it just means I can't help but think like if I did 5 years ago, I put something into it, it would have been good. But at that point in time, you can say that about any stock, right?
Right.
So I don't know. I don't know if there's a proper time to do it. I think as with any stock, I always look at it as in the event you lose money, don't make it the money you need to pay rent with, you know? And that's just how I would be with it. I don't think there's harm in doing it as long as you're okay with losing money in the end. Um, and so with this starting, so I kind of want to keep the theme of the new year rolling here. I know we talked about some changes, so that's why I bring this up is because I'm doing some changes with my book. I want to just do a whole new look out on my stock portfolio. So I want to ask with you guys, what are the changes you're making for yourselves?
I will start and I will say I did a pretty good deep dive into my Fidelity account. It did I spent like 2 hours just like calculating and then like using my interest calculator that I made and like having some AI calculations. I think the thing I'm gonna do is just I feel pretty settled. I've sold a lot of the bad stuff when I was dumb from like 5, 6 years ago and reevaluated it. I think all I'm gonna do really is just focus new cash into ETFs, mutual funds, just funds overall that are low risk, good return, and just keep it simple from here forward. Keep everything where it is, kind of like you were saying, Dylan, and keep it simple.
Yep. I mean, it just I don't know, like I'm a sit and forget it kind of guy, you
Yeah.
know? Pretty basic when it comes to this. Like I do not in my personal life want to wake up every day and be like, I have to check Fidelity.
Yeah.
I don't want to do that with my life. I'd rather do fun things like all these videos are
Hey,
making for
that
our
is
channels.
fun.
Okay. So, also there's a couple different definitions for everything, you know what I mean? So that's cool. Um, but yeah, no, I don't want to live in a world where I'm
Yeah,
waking
I
up
get
and
it.
I have to, you know. So Nick, what are the changes you're making?
Yeah, I think similar to Bradley, I'm going through and currently kind of selling out of some positions that are like individual stocks. I was actually like tracking Wingstop for a little while, and I made a good, I think like 15 or 20% return on Wingstop, but it's
Nice.
also like very much a gamble. And I was more doing that to like learn some stuff, and I learned some cool stuff along the way. But I think that to your point, unless I'm going to be able to invest a lot of time into like tracking and doing these things and potentially, lose a lot of money, I need more of a set it and forget it
Right.
mentality. And so I think this year I'm definitely going to go more of that route. I think I am because I've always got that itch to scratch of like I want to learn new stuff and try new things. So I think I'm going to try to do some long-term investing in some of these 4x ETFs and stuff like that, just to see what happens over a long time. But I'm not going to invest like a lot, 1-2%, something like that, just to see what happens with it. I've got my theories. We'll see. But I think going more from individual stocks into ETFs, broader exposure to the entire market versus individualized companies or sectors is really what I'm going to be aiming to do over probably the next 30 days.
Did you, Nick, did you go over the automated trading stuff you've learned today?
No, I have not yet.
Tell me, because I'm interested to hear what you were talking about.
Okay, so I'll preface this with so we all use ChatGPT at this point, I'm sure. And so I'm sure everybody's done this. I put in a stock and I said, I want to do a technical analysis on this. And I started hearing some like words that I've heard before and we've read in books and stuff like support and resistance and different things like that. And like, it didn't make sense to me because it was basically saying, hey, if this stock goes over this price for this long, then resistance will break and it'll skyrocket, it'll go up. And like psychology wise, it didn't make any sense. I'm like, that's like saying if milk goes over $5 a gallon, everybody's going to rush to the store and buy more milk because it's more expensive and it'll drive the price up even more. It's like, so I didn't understand the concept. So I was like, help me understand. So what I learned is I'm picturing in my head, like the stock market is like what you see in the movies where everybody's like, oh, buy, sell, and they're all screaming and stuff, right? But the reality of it is, like we've all seen it. But the reality of it is when you go into your brokerage account, you can set an order to execute automatically, right? If this, then that. If this stock goes to this price, sell. If it goes to this price, buy. Like you set that automatically. Well, I think it was 70 to 75% of all trades that are initiated are set to execute automatically. Very few of them, 25 to 30% are done because like I go in, click market order and execute trade. So when a support or resistance is defined, large institutions will say, hey, if this stock goes to $270, sell. When they run out of shares to sell, the market immediately goes to the next lowest price. And that's what causes that stock price to like skyrocket. It's because there was such a volume at the 270, those were all gone. And then some random guy was like, well, I'll sell it at 280. Well, that's why it jumped from 270 to 280 immediately. It wasn't because everybody kept buying. It was because that was the only other, batch of stocks that were set to automatically sell. And so I don't know, it just changed the way I thought about trading stocks because I kept thinking like, oh, there's a dude there watching being like, click. No, it's all just computer automated trades that somebody set up weeks ago, execute at this level, and they're not being monitored all the time. And that's what's going to like, I think Wingstop did it too. Like it dropped $10 and then went back up $10. It's like, well, what would cause it to, it's the executed trades that are just automatic. And when those are gone, it goes to the next highest or lowest for the buy or sell. So that really just stuck with me because it makes a lot of sense. And it helps me understand why a stock might go up and down so much and so drastically in such a short period of time. So yeah, I just thought it was super interesting. I don't know how you go and like use that to make money, but
that's what I was
it really helped me understand.
So essentially, that makes a lot of sense because technically there are limited amount of stocks, right? Like it is a commodity in the sense that there's 250,000 or whatever, right? So it runs out at the current price, but Dylan's sitting over here saying like, I'm gonna sell this GameStop when it finally hits $150. And
any day now.
It's at $30 and everyone else is out and Dylan finally hits it.
Yeah, or he hits it already and it just whenever it goes. And so once all the $30 are gone, if there's nobody else selling, boom, Dylan's is the next one that's the lowest price to execute. GameStop, goes up to that price, probably dips down pretty quickly because people catch on and they're like, ooh, I'll sell at that price too. But yeah, and what was really cool is like I asked the question of like, am I able to see all of those orders, right? So if a stock's trading at $100, can I see how many are set to sell at 120 or set to sell at 80? And no, like that information is not available. And so a lot of the technical analysis is guessing where that supply is, whether up or down, based off how the stock moves. So if a stock like goes up to a certain price and stays there for a little while, it usually means that there's a more sell orders or whatever at that price. And so it really helped me understand like some of the behind the scenes on the technical analysis and how people try to like guess when that happens. But like the more I learned, the more I was like, I don't want to play in that space because
Yeah.
that's it's all about guessing and confirming and proving and like all of that stuff. And it's
Right.
yeah, it's enough information to get you in trouble, I think.
Tell me, okay, here's how I think you could take it. Tell me if you think my theory holds water. So GameStop kind of did this, but it lasted a while. So let's say, I don't know, random stock, let's say Wingstop, right? And it's slowly going up and then it skyrockets like within half an hour. Would my thoughts be right if I said, "Uh-oh, I don't want to touch that. Like leave that alone and wait at least a couple days?" What do you think?
So it depends, right? So on a nothing's happening, there's no news, there's no catalyst, there's no earnings, anything like that. A rapid spike, I think, would say to sell because typically what that means is there was enough people who were buying where it just buyers outnumbered the sellers. And
Yeah.
so that
Yeah.
stock that shares went away, it jumped up. People are going to notice that. And if there's no reason for the stock to have jumped up, like people are going to start to sell, put in those orders, and I think that's going to make that price come down. Now, again, if there's, they had really good earnings, or there
Right.
was, they're buying somebody, like that could cause it to jump. But if nothing else is going on, to me, that would be like, hey, it jumped 10% overnight for nothing. It's probably going to equalize, come back down. I'm selling in that situation.
I guess my question was, if I'm watching it to track it to buy it, my thought is don't buy it. Like I don't have any, like I see it spike up, I leave it. Like that's a loss, right? It's like you're playing roulette and you have 10 reds in a row. Don't go on red again.
Yeah, I think the problem with that is, again, learning, well, like there's false breakouts and there's double bounces and there's, so maybe it spikes up, it drops a little bit and then spikes up again. So it's,
Yeah.
I think that's what people try to play and make a quick buck and things like that. But yeah, it was enough to be like, hey, because there's so many different orders out there that I can't see and I can't even begin to like understand. I probably don't want to play in that space anyways. But yes, to your point, probably not the thing you want to jump in on because it is most likely going to come back down unless there was a reason that it jumped up like that.
I think that totally makes sense. But I think what it does for me is maybe like tell everyone the opposite of what they think should happen when there's a meme stock, right? When there's a meme stock or a huge influx going up, everyone wants to buy it to catch the train. My thought is if you're savvy, like you said, sell it instead, So do the opposite of what everyone thinks that they should do, which is I don't want to miss out, so I'm going to buy. Then you're like, okay, now I'm going to sell instead of buying.
What's Warren Buffett say? Be greedy when people are fearful and be fearful when people are greedy. That's kind of same thing.
I like that. Good research. I like it.
Yeah.
You're so smart and handsome, Nick.
Well,
oh yeah.
I mean,
well, I'm handsome at least. So.
That's what we said. All right, gentlemen, I do appreciate all the information today. I'm kind of interested in automated trading now. I'm not gonna lie.
Yeah.
It seems pretty cool.
Yeah.
And where'd you say you found that out again? Just where was
the old AI, NVIDIA.
That's right.
Yeah,
That's
NVIDIA
right.
told me that.
AI is going to take over. Give it a week.
Just say please when you do your Chat GPT prompts, so that when they enslave us, they'll know you were polite.
What's
real quick?
Okay.
We have Alexa, like the Amazon Pods or whatever, microphone speakers. And it's normally like, I'll be like, Alexa, set a 10-minute timer or whatever, right? Like if I'm cooking. And that's really about it. We have like a couple plugs that like are connected to lights, like Alexa, turn off the hall light. But anyways, the point of my story is that it's Alexa sucks. So like it doesn't hear you a lot. She doesn't pay attention. She'll do the wrong thing, and I talk to her. I treat her very poorly. Like
Mhm.
I yell at her.
That-
I condescend her. And to go back to whoever
uh,
made that point was like, whenever they take over, make sure you treat them well. I'm going down first. So
oh, absolutely.
yeah,
So you're the John Connor of
I'm the
of
resistance.
yeah.
Oh my God.
Oh boy. All right. Well, didn't have conspiracies on my list today, but here we go. Loving that. All right, gentlemen. So I want to close this out today. So we kind of talked about what's happening, kind of some reflections, or sorry, not reflections, what we're going to go next, but looking at the future, what we're going to do for 2026. I kind of want to take a moment to do that self-reflection and look at 25. What was something that you did for your portfolio that you actually regretted? And not necessarily, don't think of hindsight, right? Like you could have thought about selling a stock and it made sense, like it
Right.
did, right? But it turned out bad. So what was something that was actually a bad or something you would say, hey, I would not do this again, even if I was right and made money off it. So Bradley, I'm going to start with you for that.
Yeah, I made a lot of good moves by like getting out of bad positions or meme type stuff that I had held on to for years. I think probably what I would have done is move more of that to like VOO or some ETF instead of like I used a lot of it on dividends. Not that that's wrong, but maybe I would have just split it up a little bit more to be diverse. But I made so many good moves, and then I was like I could have been a little more diverse in moving the bad stuff to the good spot. That's what I would have done.
Okay. And Nick?
Yeah, I think I made I sold out of a lot of shares or a lot of stock, including VU and some of the like 3 and 4x ETFs that track VU. And I think I did it at around, I probably missed out on a good solid 10% on VU return since then. And then so that would have been 30 and 40% on my other two ETFs. Just because I thought the market was overvalued and kind of, I wouldn't say panic sold. I made the decision that like, hey, I don't want to like be through a crash or anything like that.
Yeah.
So I'd say I missed out on quite a bit of gains by doing that. So if I like looking back, I probably would have just stuck it out. I would have sold out of maybe my 3 and 4x because those are a little bit riskier, but I would have kept my main position solid in VU just to not miss out on that on those gains. So
Cool.
Makes sense.
I think for mine, what I did was actually it was a little bit of the opposite from you guys, which is I don't think I diversified enough.
Yeah.
And that's kind of what I was looking forward to this. I'm like, there's nothing. It's just not that it's too safe. It's just that there's so much more ways that I could be earning from this, and just wanted to kind of diversify a little bit.
Yeah.
So every time I say diversify, do you guys ever watch Nothing to Lose? Tim Robbins, Martin Lawrence, the comedy.
Oh yeah, from like the 90s.
Yeah.
I know that movie.
Yeah.
Yeah.
Yeah, so like Tim Robbins has the idea to steal from his boss, and he like looks over at Martin Lawrence and goes, "Diversify." He always says. So whenever I hear that word, that's always what I say.
Nice.
All right, team. Thank you for sharing today. I appreciate you both for being rock stars as always, leading the charge on this. For everyone that's still with us, I appreciate you so much for watching the episode. As always, my name is Dylan, hosting these two lug nuts, Nick and Bradley. Today, once again, was January 14th, 2026. What episode are we on? Was it 36? I don't think I said it. Oh my gosh. We're almost at 50. That's crazy.
Yeah.
And then we got 100. I mean, wait, we can't hit 100 this year unless we do multiple episodes. Man, that's close. You know, I'm excited. All right, team. Well, for everybody else, hope you have a good morning, good afternoon, good evening. Thank you so much for joining us, FF family. Have a great rest of your day. Peace.
Adios.